Good morning, everyone. Welcome to Office Adda 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of Advanced Business and Financial Management. Acha, as I told you, I've started with the module B. Today, I am starting with one of the most important modules. Why am I saying this is one of the most important modules? If you crack the code of module B, then there is no going back. Module B is such a module where if you do it properly, then module C is in your hand and module D is in your hand too. So one of the best modules to start with is if you are done with if you're not interested in theory, then go for module B. Okay. Based upon this entire theory, let me tell you what is the topic that we are starting with. The topic is capital investment decisions. पता है, when I have to buy a particular equipment, for example, I decided to buy this particular headphone. Now the headphones can start from barely 300, 400. It can go in thousands, 2000, 5000, can go above that. Now the point is, when I think about buying a headphone, my purpose is to use it for my classes, है ना? And at the same time, if I want to use it for my classes, at the same time, I would always want that if I'm using it for my classes, whatever I earn should be more than what I spent on this. Agreed? And if I am starting with my classes, I'm starting with my own business of this online teaching and all, then I need this particular thing, then I need this particular equipment that I'm using right now, I need the digipin. That means I might be having a limited amount of money and have to allocate it among different things altogether, है ना? So we have to think about all these things when we think about the capital budgeting. That means the budget that we're going to keep if you want to buy this or any other thing or any other asset altogether. Or if I've got a good money and I decided to put it into different assets, that is capital allocation. That is also a part of this. Now the point is, capital budgeting or capital investment decisions are what? See, if I am a company and I have got 1 crore in my pocket, can I just spend 1 crore and I can say, nah, this particular machinery is not working out? Can we change the machine? How ridiculous it may sound. After spending 2 crore, 3 crore, 400 crore in terms of machinery, if you feel that, oops, this was wrong decision, that is going to hurt the company, isn't it? So the organizations are going to do it such a way that if I am putting even a single penny in a project, we would always want that minimum this money comes back and we earn more than that even. है ना? On a genuine note, this is what every organization will think of. Na? Otherwise, how will they grow? So basically, they are looking forward towards their capital investment decision. What do you mean by capital investment decisions? The decisions that we are taking in order to look forward towards what particular project we should put money in. Are we going to get the money in return? And at the same time, which particular project, if there are multiple projects, which particular project we should choose? Along with that, if we have to put money into 3 or 4 different projects, then how are we going to allocate the funds for maximum profits? Then how do we look forward to it? What is the best way to pursue it? See, there are not 2 methods overall. If I talk about this area, na, we have traditional methods as well as one method is called the traditional method. The second method is called the modern method. So traditional is quite easy, but the modern method is quite difficult. Well, not even difficult, but there are multiple things to work upon when I talk about modern method. Okay, so let's talk about it. The first question says that which of the following is a method of capital budgeting? Financial leverage, capital structure, payback period, or working capital? Financial leverage means leverage. Leverage is what? Leverage means taking a loan. We have to look forward towards a loan. I took a loan so that I can increase my productivity. In the business, everybody needs finances. Without getting finances, how can I expand my work? So financial leverage is all about getting the money that helps us to grow. है ना? That is not a part of capital budgeting. Capital structure, it's like what amount of debt, what amount of equity we should have. We have talked about debt and equity in the previous classes as well. Debt should be up to a limit. If I take a lot of money as debt now and I cannot repay it, my organization will be doomed. Then comes payback period. Payback period means the period for which what I can do is, payback period is that particular period which relates to the era of the time period in which I can get the money back. If I take a loan from you, I took a loan of barely 10,000 from you and I invested in the market. But I will pray to God that I don't know what am I going to make, but I should get this at least 10,000 back so that I can pay you. This part is called payback period. This is a part of capital budgeting. Because I took money from you and I have to give it back to you. Why should I give it from my pocket now? I took a loan from you so that I can invest, I can earn, and I can repay you. So there's a lot of pressure on me. So then payback period is the period in which I can get the money back from the project. And then we have something called working capital. Working capital can be defined as CA minus CL. So that's another point. So in this case, the correct answer is payback period. Okay? Got the point, everyone? Next point. Which capital budgeting method account for time value of money? Acha, what do you mean by time value of money? Time value of money is basically linked with the area of time value of money can be defined as something in which I can say the value of money changes over the period of time. See, if I have 1 rupee today and I invested in the market, after 5 years, what would be the value of this money? 1.10 maybe. That's because of interest. This is interest now. This part is called compounding. What if I ask you someday that, array everyone, let me know this. I think everybody is going to ask this from a banker, or if I put the money in LIC or insurances again. Now banks have taken up the agency work as that, so that is also there. If I someday come to you and ask you that, sir, ma'am, can you please tell me if I want to get 1.10 after 5 years, what is the amount that I should invest today? है ना? मतलब I will ask you that the amount will definitely be less than 1.10. Otherwise, if I put 1.10 today and after 5 years I get 1.10, what's the fun of it? Why would I be putting so much of money if I'm not getting anything out of it? That means maybe today I might be putting 0.99 rupees. That is why it becomes 1.10 in the future. That can also be there now. So this part, when we have the future value and we want to find the present value, this part is called discounting. This is basically one of the strongest elements of capital budgeting. This particular part plays a very important role. Which capital budgeting method accounts for time value of money? Return on investment, payback period, NPV, or accounting rate of return? ARR. Acha, these are all methods of capital budgeting. ROI is the money that I receive back after a certain period of time. Acha. Now, return on investment means the money that I receive back on my investments. Payback period means the period in which I can recover the money back. Net present value talks about, this is a time value of money based thing. Return on investment, payback period, and accounting rate of return. All these three are traditional methods. They just talked about one thing. I invest 10 rupees today. In how much time I'm going to receive it back? That is payback. Return on investment is like mota. I ask you that, acha sir, if I invest in this scheme, what should I get? You said, ma'am, you will get 10 rupees extra. I go, acha, I am investing 10 rupees and the value of this project is 100 rupees. That means I am making 10%. You said, yes, ma'am. This is return on investment, and similar thing is there in accounting rate of return. So in both the cases, I can say we have it in percentage. We do not talk about value of money changing over the period of time. It makes a difference, everyone. I think when I was a kid, I used to find 10 rupees a big amount of money. Matlab in 20 rupees, we could do a particular party. For, I think we all used to carry 20 rupees for the particular party. The moment we have 100 rupees, it was like, we can buy Coke, we can buy chips, we can buy any of those patties and all. We still would have leftover money. Power of money at that point of time was so different. The first time that I got my vehicle filled up with fuel, I think there was a two-wheeler there. The two-wheeler got filled for rupees 40 per liter. Matlab, I could buy, and I think roughly if I look forward to it, then Hardly for 500, 200, 300 rupees I could get that particular thing filled. I think 5 liters was enough for that particular. I think, two-wheelers, I think maximum I used to spend 200 to 300 rupees. Not more than that to fill the full tank. At this point of time, if I get my car to the petrol pump, I know that at least I have to spend between 3,000 to 4,000 rupees to get the fuel tank filled up. What has happened? Inflation. Inflation, time value of money, the value of money changes over the period of time. So all those things are there. Why aren't we considering it? In return on investment, we are not doing it. Payback period, we are not doing it. Accounting rate of return, we are not doing it. That is why net present value actually said, consider the time value of money. The power of compounding is there. So that is why this correct answer is net present value, which is a modern method. Okay, this is a modern method. Yeah, we are done with this question now. Next question. Acha, let me just correct it a bit. Just a moment. Acha, no, this is actually another question. Let me just give you a brief there. This is another question. Which capital budgeting method gives equal importance to all cash flows over the life? Equal importance, payback period, accounting rate of return, NPV or IRR. In this case also it is NPV because NPV considers the time value of money. ARR for ARR everything is one. They are not giving importance. Payback period, they're just worried about the total payback. It doesn't matter in how much time we're doing it. We're just worried about the time and the rupees that we have spent. Internal rate of return is another sibling of NPV. If you understand NPV na, only then you will be able to see the time value of money. Matlab, it starts with the concept of time value of money. Then you can understand the concept of net present value. And the third is internal rate of return. Ultimately, we'll have to go with the internal rate of return. Na? So in this case, it is net present value. Chaliye. Now can we talk about the next question? Look at this. I actually thought that it was a similar question, so that is why it happened. Now let's move on and talk about it. Acha everyone, in this case they talk about thereof in the capital budgeting. Acha, what is capital budgeting? Capital budgeting is thinking and planning. Acha, I have 10 rupees, where should I spend it? I have 1 crore rupees, where should I spend it? Whether I should buy. Acha, this is also, there is one particular thing. There are certain decisions. One is accept or reject. I put one particular equipment in front of you and I said that, sir, this is for 10 crores. You said, no, I don't want to buy. I would like to buy. Accept or reject decision is like you have one particular thing and you decide. Second is mutually exclusive decision. In this case, I put 3 plans in front of you. Machine A, machine B and machine C based upon their usage, and I ask you to choose among one. You said B has the maximum benefit, so I am rejecting these two. That is called mutually exclusive. You just have to choose one. Last point, accept, reject, mutually exclusive. Last is capital rationing. The allocation is there. In terms of capital rationing, can we say the portion of capital rationing is something in which we can say we allocate the funds? How do we allocate the funds? Matlab, if I have 10 crore, I can put 2 here, 3 here, and the remaining 5 can be given to the last one, which gives the maximum return. Hai na? Now that is capital rationing. So this is called the decisions under capital budgeting. Okay, now let's move on to the question. In capital budgeting, what does accounting rate of return measure? What does it measure exactly? Accounting rate of return is a traditional method. Under this method, what we do is the time taken to recover the initial investment. ultimately what we have to do is we'll have to find out what is the time which is required to recover the initial investment. That is payback period as such. Percentage return on investment based on accounting profits, NPV or IRR. NPV and IRR is basically modern method, so I'm ruling it out. Then percentage return on investment based on accounting profits. I told you return on investments and accounting rate of return, these are all the same. So in this case, we can see that the correct answer would be percentage return on investment based on accounting profits. Okay? Next question. The concept of present value is based upon the principle of compounding, principle of discounting, both A and B, or none of the above. What would be the answer in this case, everyone? Okay. Now, based upon this, is it a compounding process? No, it's not. Time value of money takes discounting. As I told you, if I move from present value to future value, this is called compounding. And if I come back from future value to present value, this is called discounting. So there is just one particular difference there. So PV concept is based upon discounting. If I put 10 rupees today, what would be its value in future? That is compounding. If I spend 100, if I'll get 5 rupees after 5 years, what should I spend upon today to get that 5 rupees? That is called present value. Coming back is present value. That is called principle of discounting. Next point. The conflicts in project ranking and capital budgeting as per NPV and IRR may arise because of size disparity, time disparity, life disparity, or all of the above. NPV and IRR, but normally, I told you, NPV and IRR are siblings. IRR gets the power from NPV. The things, the time value of money concept, all those concepts which are there, that is because of NPV. So the point is, but sometimes they do not match. And all the reasons are these. If project A is of a bigger size, project B is of a different size, the NPV and IRR answers will vary. Time disparity, if one is for 5 years, the other project is for 3 years, how can we compare them? Life disparity, the life of that asset is more or less. That will also make a difference. So in this case, when we talk about conflicts in the project ranking, in capital budgeting as NPV as well as IRR, it makes it all different. While, see, the point is, I think we will talk about the portion of the time value of money now through questions. In the upcoming class, I'll bring a particular time value of money based question so that you can actually understand that point. Till then, the crux of the story is, in terms of NPV, they use the time value of money. In the IRR, they use the time value of money. But in certain cases, they both will not give the same answer. That means size disparity, life disparity, and time disparity. These three will always cause a trouble. So in this case, the answer is none of the above. Okay? Chaliye. So let's end the particular session here. But before we end it, I hope you know that from today onwards, that is from 8th September, we are looking forward towards the era of changing not only us, I think if you know that the registration process is from now on having additional charges. Late charges have been added, right? So if you haven't got yourself registered yet, kindly get yourself registered as early as possible, and that too within that particular period of time, right? So what you can do is you can take our CAIIB Mahapack. What can be done, CAIIB Mahapack, under which we provide the courses there, and we are just about to start another batch. So what you can do is you can go on to the area of CAIIB November 2023. And this is the Mahapack. The Mahapack is currently available um, at um, at a discount. So what you can do is you can go onto the area of the CIB Mahapack. We've got 500 hours of online classes, test series, ebooks, 970 videos. The videos would also include the optional classes as well. That means you can choose your optional while looking at all the videos, and you can choose after looking at the content. All these things are available 3 month, 6 month, as well as 12 month. What you can do is you can click on the area of buy now. You can use the code Kanha80 and you will get 80% discount. And along with this, why should we take up the Mahapack? Under Mahapack, you get bilingual as well as English medium batch. You get the previous batches which are already done, the current batches which are going on, everything, and future batches that would come up. Revision batch and everything will be considered together there. So you can take it up, and this will help you to understand the entire topic in a better way, as we are conducting classes where we are having doubt sessions, we are providing you mock tests, and we are providing you marathons and mini marathons, mega marathons for your preparation for the examination, right? So if you're looking forward to it, then kindly go ahead and check it out on our website or in our app for further details. Thank you so much, everyone.